Good morning, everyone, and welcome to the SPX Road Map for today. And as I said, it's slippery when wet. And it's wet with volatility expansion, making the distribution of the deltas and gammas wider, so it's easier to slip through the levels. See, there's a double or triple entendre there. Okay, let's talk briefly about Friday. Let's pull something up here. Discuss amongst yourselves. Okay, it's the October 13th. Okay, so Friday's flush was about, where's Friday? Here's Friday. Friday's flush was about 2-point-something%, and we were cruising along, heading to new all-time highs, trying to hold 57.40, 50 in that round number. Remember, 6,800 was what we were all gunning for, or some of us were. When we had the Trump tweet, we kind of managed to hang out for a little while. It was in response to China's saying they're not going to send us rare earth minerals or whatever, December 1st, and we're supposed to meet them November 1st. So it's all this posturing and blustering. That didn't matter, because once we broke this, pretty sure it was 67.40, but once we broke the magic gamma line, wherever that magic gamma line was, it was pretty much down goes Fraser's straight line to 6,700. Down goes Fraser, for those of you who are kids, is what Howard Cosell said when Fraser was being knocked down by George Foreman, if my memory serves me well. Down goes Fraser. Out on the wide world of sports. Anyway, Google it. Anyway, and then once we broke 6,700, it was just straight negative gamma down, market makers chasing, the large IC put sellers adding fuel to the fire. So the large positions that were there, they brought them back to close, which is removing positive gamma, removing positive delta, buying back puts, which is buying puts, which is adding negative delta, creating this cascade, which happens sometimes. You would have thought that these people learned by now and would have closed it. I could have showed them a better way to manage it, truthfully. But, oh well, they just did something mechanical, and they made matters worse for themselves. It was kind of a crappy day for me, just FYI, I lost a couple $1,000. Not horrible. I was down 12 or 14 something before I did some fancy footwork. And here we are. And so, and then after the close, we closed at like at 55-ish, something like that, somewhere over here. And then we had another 50-point flush, give or take, after the close, all the way down here. Now, the flush after the close, I have a few theories, and maybe they're right, maybe they're wrong. One of them is potentially related to more market maker hedging, which doesn't really make sense because they would have hedged the close. Next one is we broke a magic line. We broke a 20-day moving average. We broke some other magic lines. And so from what I can gather, and also the rolling 1 month, 3 month realized volatility, 4 had a crossover. So we broke some lines that mechanical, algo, hedge fundy kind of people do. And from what I know, and again, I could be wrong, from what I know, this is what I think, and again, that's what I think it is. What I think, and I'm pretty sure, is that while some of them are new school and they'll kind of hedge out, do whatever they have to do intraday, a lot of them wait for the close and they just kind of like the hour comes in and they do and they just kind of dispassionately sell according to their model, and there we are. And so we broke down we kind of went down pretty much right to the 50 MA. Good morning, Dave. We kind of went down. Normally I don't go through this whole, let's just pull up the MAs for a second. So here's the 20, 66, 62-ish, where we have some, we also have some like calls or put sold there, some positive gamma to stall there if we could get there. We did overtake it overnight, but it kind of went right down to the 50 MA right here, a couple points above it. And then ES actually tickled and broke the 50 MA. And so here's where we are, 50-day moving average, in case you don't know what I'm talking about when I say MA. Okay. Let's get this back into something usable. Let's get those moving averages off. So the other thing, actually, let's go back to this. Let's go to this. And then we'll get to the nitty gritty of today, just kind of giving a broader landscape view for a second. Let me hide that. Let's go to a weekly. I want to show you this. Right, here's the breath on Friday. We know we had bad breath. I don't have a McClellan oscillator, but if you look at any of those breath kind of oscillators, there's a few of them floating around on Twitter that are good. People are basically, we suck. We pretty much hit a bottom. Does that mean we can't go lower? No, not at all. We could, but this is pretty much where we tend to stall or bounce. This being 66, 65.50 Friday's close. So what I want to show you is this. So this is a rolling RV realized volatility, the blue, and applied volatility, the green. And this is a weekly. So this isn't like targeted to perfection today. But what it shows us on the weekly, in general, other than April, when it was almost a COVID-like phenomenon, when IV is selling at such a high premium, it's a bottom. When IV is selling at such a high premium, well, we came into the April mess. Other than that, IV, we have it spiking here, a little bottom, that end of July sell-off. Forgot what numbers that was. I don't remember if it was NFP, the beginning of August or something, CPI, elemental P, some alphabet soup numbers came out. We tanked in the beginning of August, and a quick turnaround, like a one-day thing. We had a similar percentage move in VIX, so this kind of rhymes with that. And just because it happened before doesn't mean it's going to happen again, but it kind of rhymes. The difference being that was a one and done sticky number, and this is an ongoing what's Trump going to do unless everybody decides it's taco, and that's the end of that story. So because of this, I'm cautiously, I don't know if bullish is the right word, cautiously willing to say that the bottom is probably in. Maybe something nasty happens, we undercut a little bit, or it could be in, and we have all this volatility that's potential fuel for a rally. Of course, if volatility spikes a little bit more, then it's, second leg down and second leg down. So we're at that inflection point. Gun to my head, I think this is done. Gun to my head, I think this is done. And I think we go higher. I'm not predicting, but it wouldn't shock me if we saw 5,700 and maybe 5,750 playing with the all-time high, maybe even by the end of the week. We have to see how it unfolds. I like to wear my opinions like a garment loosely and, change them based on what the structure shows me. And so here's where we are, bottom of the chop zone. I'll show you how I derived it. Then we have that 6640. And so and last night it looked like the 40-20 is kind of the main area that we were supposed to chop. 6650 round number where we can get a reaction. Top of the chop, which actually that's that 6655 20 MA, which also corresponds to the overnight top, which also corresponds to some positive gamma where market makers are long gamma, which is where we tend to stall. And then if we get over there, it's kind of a choppy grind up toward whatever 5,700 is theoretically in our sights. The expected move when I looked in the morning was about 45-ish. We were at about 40. So the expected move put in the morning at 5:30, whatever, put us at 6,600. Bottom of the expected move, 6,600. The top of the expected move, depending what volatility does, depending what local traders do. Do they buy or sell calls? Do people come in looking to buy the dip? Do people come in looking to lighten up? And there's different entities out there with different agendas. And so we'll see how this balances out. Drew, you want to say something?
Hey, good morning, everybody. Can you guys hear me okay?
Let me put ES up for you.
Doc, can you hear me?
Yes, I can.
Oh, okay. I just didn't know if my mic was working. All right, guys. So a little bit aligned with what Doc's saying here. I think if ES can hold above 695, I'll be really strong in my longs, and I'll probably size up max position for me today if we can hold that. Now, if we can hold above 705, I'm really going to like those longs. But I think 705 might be an area where we could see a decline. I'm watching that closely. If that doesn't show up, then that will just be another add place for me. If price, for whatever reason, starts to come down and holds below 653 near the open, after the open, then I'll be potentially targeting that 630 area below. So that's kind of my if then why statement. Really think we could see 730, but I'm going to hold my breath to really think that until I see some movement. I'll do a market update around noon today, just to show, kind of update what I'm seeing, just because I don't really see too much at this time.
Let me just throw. I forgot to run the E-mini
Yes,
string
Yeah.
for hours. But that I'm running it now. But let me let's get this here so we have some kind of gamma levels on here to compare to. So you said I heard you say something about 75. What was your take on 75?
No, we're at 75 now. If we can hold
Okay.
above 95, and then 705, I'll be targeting 730.
Okay. And so it's a 40-point difference. And so 05 would be what? It's about a 40-point difference. And so 05 would be 75 at 70, 65. Up near that 20 MA or over it.
On SPX? You're saying on SPX stuff?
And these are meant to accuse lines, by the way. I have discounts. I also have
Hear me better now?
I also have my own string, but I haven't I just forgot to run it. I'll put it in the chat for my subscribers. I'll send it out on Substack and WHOP in the Discord so everybody will get it. And that's basically, so that's what's going on here. Let's go back to
Can you hear me better now, Doc?
go back to SPX because that's where I live. Where's my thing? I want to see my lines. I trust my lines. I made them. Okay. So now let's take a look at one more thing while I'm here on TradingView. I know it's a very slick, organized presentation. And that is, let's take a look at some of the other volatility stuff. So this is the VVIX-VIX ratio. And long story short, when it comes up here like this, it's telling you danger, danger, Will Robinson, but it's also telling you that demand for puts and hedges is kind of extreme, kind of overdone. You know, at 6, tension rising, that's your warning sign. At 7, a high risk zone, and yeah, no one would say we're not at high risk, but that tends to be a bottom. It tends to be a bottom. And here's the rolling Z-score. I got this from Eunice Sinclair's book. 10-day rolling Z-score, the difference between the 3-month VIX and the 1-month VIX, with a moving average correcting here. And again, it's showing the same thing. It's showing that this is kind of extreme. There's also another one that I couldn't get couldn't figure out how to get TradingView to do it for me. I just got tired of playing with it last night. And on the 65-minute, I mean, you don't need this to tell you that on the short-term time frame, we're in a downtrend. Now, the long-term time frame, we broke trend according to this, but we get up a little bit, we can kind of be back on trend. This was showing a significant pattern, and now it's just kind of looking a little noisy. And that's kind of where all this is. Let's get back to my trading view. Okay. Now let's get to this. I'm a little bit of a math professor sometimes. Okay. So why am I talking about 6640 so much? Well, okay. You see here, 6640, this line, that's market makers, short gamma, customer long positions. In this case, they're long 2,600 calls-ish. And so Gamma for Dummies, so to speak. They should, that's probably the best-selling book, right? I could see it at Borders or Barnes and Noble, whoever sells books now. Market maker, short, customer long, magnet, market makers head in this direction. On the other hand, once we get up there and don't go or stall, and market makers are too long, and as we move away, then they have to sell. And you have this next magnet here down at 20. That's why I kind of arbitrarily said 2040 is a drop zone. But really, once you get down to a 2025, your next magnet is down at 6,600. Broadly. Now this is going to change when IV changes, if IV goes up or down, if people monetize stuff, close stuff. I have a few puts in inventory. Blind squirrel got lucky. That cost like, I don't know, $2 or $2.65, I forgot, that are like $15 or $20, whatever it is. Big gain. Now I also have losses, but that's not the point. The point is, I'm going to sell those things at the open. I'm going to hit sell at market. I wonder how many other people are sitting there. They're going to hit sell at market and sell their long puts with a juicy profit, especially those ones expiring today that cost $3 and are now $30. So we have to wait. Well, we don't have to do anything. I'm going to wait and see how this shakes out. Above us, 6650, round number, for a stall point. And so here we have, I'm just going to look at this broad area. We have market maker long gamma. So what happens when they're long? As we go up, they go opposite direction of the move. As we get closer, they sell. As we move away, they buy because then they're too short. So this mean reverts sticky toward that if we're close enough. And positive, negative gamma does the opposite. Instead of mean reverting, it magnets, and then when you move away, it accelerates to the downside. Whereas here, when you move away, it kind of stalls and sticks. Now we have these two fighting each other out. Could be the other, it could easily be a 64, 6640, 6650 called debit spread. And even if that's not what it was, that's kind of what it is. And so it's going to act a little differently. That's really kind of all that's here, like I say, don't torture the data. Don't torture the data. Now let's take a look. Well, then I'll show you options depth's new toy. We'll get to that in a minute. Okay, well, here's the new toy. This is their Vanna model. I haven't really decided how I want to use it yet, so I'm not going to comment or make interpretations. I'm just going to go back to but I will show you what I do, something else. So here's what we have going on here. Again, this is the same positions visualized differently numerically. My mind works pretty good with numbers. When I see a line, oh, it's a line. When I see 1200, I know 1200 is a lot bigger than 400. And I know that 124 underneath it doesn't mean anything. I know that that's 65 1,400 is a pretty solid number. At 5,000 at 6,550 is a solid number. So below 6,000, if that happens, there's something over here. But like happened on Monday, if VIX spikes, that doesn't really matter that much, or if they chicken out and close them. Top side. So we have 2,608, but who's counting customer long calls over here? And so kind of magnet, and that's kind of where we've been ending up. We could stall here at 50. Now, over 50 is really not a lot. You see frog in a blender, red, green, red, green, red, green. If you threw a frog in a blender, that's what my old mentor said. Complain to him. I'll give you his Twitter. You can cancel him. Frog in a blender pattern, red, green. And that's kind of all the way up to 66.85, which is kind of the top of the expected move-ish. And so we have a wide expected move because volatility is wide. And if we break 66.85, well, then, yeah, we could go to 6,700. Now, if someone is bullish or if you're looking to want to get into something, I put something out. It's on. I tweeted it out yesterday on Twitter, and it's on my Substack. My Substack, I gave a little more granular information, just ideas, basically thematic baskets. Nuclear and AI and infrastructure, whatever it is. Some of those meme type names, some of them are your NVIDIA's, AMD's, or infrastructure builds. And it's a list you might want to take a look at. I don't have any entry or exit things, whatever. It's kind of like a watch list you might want to look at if you think that we're going to resume the trends we were on, or if you think the party's over, then you might want to short it or sell your positions. So I put that out. I'm going to be doing a little bit more individual stocks. I mean, I used to be a stock picker in my old age, in my youth, and I still do. I just don't talk about it as much. I did pretty good with the stock picking, good enough to have a nice house in upstate New York, a nice house in Florida, and to have enough discretionary capital to trade 0 DTE iron condors with 50,000, 100,000 in margin, not 50,000 in margin typically, and it not really be a thing. So I did pretty good at stock. Anyway, volume very low. I don't know. Is anyone else having a problem with my volume?
I'm not. I can hear you fine.
Okay. I hate to say it, Ian. Maybe it's you. It's been me as the story of my life. Is it just me? Yeah, it's just you. That's been the story of my life. So anyway, that's really it. Oh, another thing. Some of you who follow, it's YouTube. Okay, I don't know. Way above my pay grade. I'm more than thrilled I can get this to work at all. Now, some of you may know who Macmillan is. Larry Macmillan wrote back in the day pretty much the textbook, the Bible on options, in the 1990s. I got the grubby hands on in 1998, 2000. I started reading it a lot. And so Macmillan has his, and he does old school stuff. Macmillan has his Macmillan Spike Peak Buy Signal Watch. What does that mean? Well, that means now we have to go back somewhere else. I take these all the time. They usually make money. Do they work all the time? No. And this time it also makes sense to me. So it's not just Macmillan said so. Other times it doesn't. Okay. So what's the McMillan spike, buy, signal, peak, whatever you want to call it? So what his signal is if we get a closing price on VIX, closing price, 3 points below the intraday peak, 3 points below a local peak. So it doesn't have to be today, it could be tomorrow. And the local peak I saw was 2244 is what my chart said. So 1944 close, a close somewhere down here, 1950 if you want to round off for government work, 19 and a quarter if you want to be careful, below 20 if you want to be a cowboy. His mechanical system is by usually 45 DTE to 60 DTE, sometimes 30, depends on his mood. I like to give him more time for theta. By at the money SPY call, sell 20 points out of the money call. So it's a call debit spread, 20 wide at the money, 30 to 45 to 60 DTE, your flavor. It's a 22-day signal. So after 22 days, the signal expires, so to speak. So close it out in 22 days or not, but the signal expires in 22 days, not 21, not 23. He's like meticulous. 22-day signal. And if it goes through the top, which it does sometimes, roll your debit spread up. So roll it up. And the buy signal is violated if we go back above 22.4, in which case it's mechanical, close it out. No thinking, no common sense, no anything, close it out and wait for the next signal. And he has lots of signals. Sometimes he has a bullish and bearish signal working at the same time, and he takes them both. I usually don't, although on occasion I do. He might have a short-term bullish and a long-term bearish, or vice versa. Ask McMillan. Here he is on Twitter. Let me find him. I call him the OG. My boy. Oh, yeah. Well, yeah, here it says, I don't know if he mentioned it in, so I'm just going to say, you guys who are watching, I'm sure who know who he is. I'm just going to say the OG. Oh, yeah, the old reboot. That's McMillan. So anyway, that's his signal. So here he stopped out of his modified Bollinger Band, cell signal, whatever. He's got different signals, and he takes them mechanically, and he's been working these signals for at least 25 years that I know of, so I trust him. I tell you, and now we'll see, look at that, we're heading back to that 40 magnet. So we'll see how it goes. We'll see how it goes. I don't know. Your crystal ball is as good as mine, especially in this environment. Gun to my head, I'm bullish. Gun to my head, I think the worst is in. Gun to my head, I think that volatility pop and those puts don't realize and they start to melt or get closed could send us up. Of course, that can change, change on a dime. I was bullish on Friday until we broke 67.40, and I was bearish, so and I don't.
Bad day to have a bias on Friday and stick to that bias.
I don't have a macro view, or whatever. The P of the Max 7 is this or that, or it's a bubble like 2020, like 2000, or it's not a bubble because they're going to make $1 billion, or whatever, $1 trillion, whatever it is. I don't care about that. I care about that for my long-term stuff, and that's a whole different story. That's a whole different discussion. That discussion we're having now, the discussion we're having now for trading, it doesn't matter. a market never broke because the PEs were too high. It broke because liquidity dried up. It broke because of something like positioning is off whack. That's why they break. They might bend, but they don't break. Anyway, any closing comments? Any closing questions? Here we are back at the magnet. And that's it. I think it's relatively simple. Oh yeah, let's take a peek. Yeah, so here I did a trade for science and it sucked. This was a 16 delta on Friday. So I kind of did a 5 wide 16 delta strangled sell. And we went through the top, but I mean, it was a possibility of losing whatever it is. Pretty much, this is pretty much max loss the way it's set up. So that's okay. We'll make 260. I don't know what I'm gonna do with it, but that's not that I knew that selling calls into this was not a move. I just wanted to experiment, and I'm willing to lose $100 on an experiment. So what would I do now in the church of what's happening now? Well, I'm sorry, I'm a Cossack, and it's juicy down here. Well, here's the overnight low, 65.05. 55 cents. I like it. So what do they say the expected move is here? 85, this is wrong. This is wrong. That's not the expected move. The expected move is expected move is 39-ish. It was 40, 45 before, so it makes sense. That's about where it is. That's more like it. And so the expected move of 45, and we're at 40. Expected move, like I said before, was on my chart, takes us to 6,600. Now, usually that would be a 20 delta. You see it's a 27 delta. The deltas are kind of spread out. Deltas are kind of spread out. A 5 wide like that, even, I see the out of money ones are so expensive, you can't get anything much better doing it. Now if you want to do something like a third the width of the spread kind of thing, you probably have to go here, maybe even here. Well, it doesn't give you much different. So a third the width of the spread trade would put you somewhere like, let's look over here. That's a quarter the width of the spread, something like this for $1.35, or maybe you want to do a 10 wide, even get one away from the round number. This might be interesting. And see if we can get away from the round number on the bottom. I don't mind that. And so something like that. It's hard to build a fly with IV this high and everything crazy. So, but again, just for the sake of fun, what would I do? In theory, what might a decent fly be? Let's start with a put fly. If we have that down goes Fraser moment. So if you're willing to call BS, and we say, okay, well, if 40 breaks, it's kind of not a lot below it. Maybe something like that for 55 cents. I'll buy one at 65 cents. I'll buy one. Those of you who haven't watched me before, I do this in this account. I'll spend a couple $100 and either win or lose. I'll manage it. If I remember, sometimes I forget. This is a little Ira from once upon a time when I had a job. I was the COO of Adult Centers for Day Treatment. It was like we had side programs for depressed seniors and substance abuse and dual diagnosis and all that, and whatever. And it was kind of like a private thing. And then when the hospital started taking over, when Tennant and Columbia started taking over the small local hospitals, things changed and they wanted to put me on salary, and they gave me a salary and a whatever it was, and put him. I didn't put my resignation yet. When they said no, we want you to punch your time clock, I gave them like 2 weeks notice. Sometimes I was there 12 hours a day, sometimes I was there 2. I just took care of what I had to take care of. Anyway, so that's that. Enough storytelling. Oh wait, let's look at a call. So and often on the same day, you can get you can have some success with both. What happened here? Let's use 50. Okay, let's just put it right here. Let's put it right on the 40. Let's see what happens if we do that. It's not letting me do it the way I want to. I'll just build it myself. Let's just say 40. Let's just go. Let's go 45 to 50. 50, 65 times 2. That's a 15 wide, huh? Times 1. That's a little expensive to just play games. I could move it up 1, do it like that for 95 cents. That's not bad. Or I can move it down here like that. Also 95 cents. Playing for the stall at 65. I think I'm going to give it a little room for 95 cents and see what happens. Okay, that's it. Any other comments, questions, concerns? All right, everybody, take care.
Good luck, everybody.